I found a trading strategy on YouTube with 194,000 views with a too good to be true title. So I built it into an expert advisor and ran it on 3 years of data. And honestly, I did not expect what came back. I'm going to walk you through exactly how I pressure test a strategy like this from scratch, what I look for, what made me nervous, and the one change that turned the results into a much better one. Here is the thing about me and these kind of videos. Every time I see a strategy with a flashy title and a perfect looking backtest, I don't get impressed. In fact, I get skeptical, asking myself, what is this trader not showing me? I've been burned enough times to assume the worst, but this one triggered me a lot. The logic actually made sense. Moving averages for the trend, a stochastic for timing the market. Very simple and clean. So instead of arguing with the screen and backtest it manually taking days and days, I did the only thing that settles it. I built an expert advisor to test it on MT5 with real tick data and let 3 years of history tell me the truth. And that's where it gets interesting. Okay, so let me give you the strategy in about 30 seconds because it's actually simple and that's a good thing. You've got 3 EMAs, 21, 34 and 144 on Euro USD 1 hour time frame. They're stacked on the chart. The 144 tells you the major trend. The 21 and 34 tell you the minor trend. When price crosses the 144 and the faster 2 EMAs line up in the same direction, the trend has flipped. That's your context. Then the stochastic does the timing. You wait for a pullback, stochastic pushes into the overbought or oversold territories, and when the D and K curves crosses, that's your entry. You're catching the first pullback after a reversal, once per reversal. That's it. Trend for the EMAs, timing from the stochastic. The strategy comes from a trader named Suhail. I link his video below. Credit where it's due. The logic is solid. Clean trend filter, sensible entry, exactly the kind of thing that should automate well. One thing he stated about the stop loss though, he said put it above or below the swing, but he did not mention how big that distance should be. So I took the liberty to add a buffer as a multiple of the average true range, 1.5 ATR above or below the swing. So it scales with volatility instead of guessing a fixed distance. I ran the first test on Euro USD 1 hour chart, his exact settings, 1 to 2 risk to reward, 3 years, real tick data, and the results were solid. It was up 55% over 3 years of history, profit factor of 1.2, positive consistent trade. For a free strategy of YouTube, that's already better than most of what I test. But here is the part that made me nervous. 13 losing trades in a row and a 26% drawdown. Live, that's watching your account bleed through 13 straight losses and drop quarter of its value. Mathematically, that's normal for a 2-to-1 strategy. You lose more often. You just win bigger. But knowing that is one thing and living it is a totally different thing. Most people will kill this strategy at loss number 8 and never see its recovery. That's the real reason strategies fail. Not the strategy, the person watching the account bleeds and not prepared for losing streaks or drawdowns. And that's exactly the kind of thing I only find by backtesting using algorithms, not watching a video about it. So here is what I want from you. Drop a strategy in the comments you think it's worth automating, and I'll run it through this same process. If it's solid and can be automated, I will showcase it in a future video. Now, back to this one, because I changed one setting and it fixed almost everything you just saw. So the problem wasn't the entries. The entries were fine. The problem was that 1 to 2 risk to reward made the strategy winning trades less often, which is typical for 1 to 2 risk to reward, and that long losing streak was the price. So I changed one thing. I brought the risk to reward down to roughly 1.1. Same entries, same everything else. Look at the difference. Profit went up about 70% instead of 55%. Win rate jumped from 38% to 54%. Drawdown dropped from 26% to 17%, and that 13 losing streaks that made me nervous down to 4. Same strategy, same entries. One number change and suddenly it's something a normal human could actually trade without losing sleep. That's the part nobody's showing you. Not the strategy, but the fine-tuning. So at this point, I'm thinking great. 1-to-1 apparently looks much better. Let me run the same settings of 1-to-1 on gold and confirm. It was actually worse. A lot worse. Same strategy, same 1-to-1 on gold instead of Euro USD, and it barely made 14% over 3 years, with a 20% drawdown. On Euro USD, that change was the hero. On gold, it nearly broke it. And here is the kicker. On gold, the original 2-to-1, the version that struggled on Euro USD, made about 72% with a lower drawdown. The exact opposite of what happened on the Euro USD. So which setting is right? Neither. That's the whole point. There is no magic risk to reward or settings that would work on all asset classes. Gold, for instance, moves so much different than the euro. Bigger swings, different rhythm. So it wants a different settings altogether. Anyone who hands you a single best set file for every every pair is selling you a fake dream. The setting depends on the asset, and the only way you find out is by optimizing and backtesting it. Now, here is what I really want you to take away from this video, and it's not about this strategy at all. Everything I just showed you, 4 full backtests, 2 pairs, 2 different risk settings, 3 years of data, I ran it all in about 5 minutes. Now, picture doing this by hand. 3 years of 1 hour candle is around 18,000 bars. To manually check the EMAs and the stochastic on every single one, log every single trade in a spreadsheet for 4 scenarios, that's not an afternoon. That's something like 2 weeks of 8-hour days staring at the screen. 2 weeks versus 1 coffee. And that's the real reason I automate. Not because a robot is smarter than me, because it lets me ask a question. Does this strategy actually work, and on what? And get an answer before I even risk a single cent. And in a very fast fashion as well. The strategy was never the hard part. Testing it properly was. That's what automation gives you back. And if that's clicking for you, if you're sitting here thinking, okay, I want to be able to test like that, that's exactly why I put together a free expert advisor you can start with. It's called Easy Trend, and it comes with a blueprint that walks you through setting it up and running it on your own charts. The same way I just did here. No cost, no catch. It's the fastest way to go from watching someone else's testing a strategy to actually doing it yourself. Link is in the description. And don't forget, drop the strategy you want me to put through in the comment, because the truth is the strategy was never the hard part. Testing it honestly is. So let's find out the next one worth testing. See you next week.